Hi, good afternoon, everyone. Welcome to the IPO launch event. So my name is Fujia Liu. I think already introduced. I'm the Senior Equity Product Strategist at Active Equity at eFund, representing all the investment strategies that engage with our global clients. And sitting next to me is Mr. Qi He. Maybe you want to say hi?
Thank you everyone for coming. I'm He Qi from eFund.
Yeah, so let me introduce also Qi He's bio. So he is currently the Managing Director at Active Equity and Senior Portfolio Manager, and indeed the lead portfolio manager of our fourth product upcoming. So very honored to be here, both of us sharing our investment insights with you. So before I, go on asking my questions, let me also add to Mr. Qi He's profile. So he has had 15 years of investment and research experiences dedicated in China industrial sectors. So he has built, really a tremendous knowledge and deep dive, understanding and insights of the Chinese companies. And that is why, for our environmental protection fund, the industrial growth is our main focus. Mr. Qi He's investment strategy includes capturing the opportunities that are highly competitive with large growth potential as well as matched with reasonable valuation. So on that note, Mr. Qi He, can you please outline your investment scope as well as the focusing areas that you will be investing into? And to echo our, the event today, how are you capturing the next generation growth in China?
Thank you, Fujia. Thank you for your questions. So maybe I can give a little bit of introduction of myself. So He Qi, coming from eFund Management. I have an engineering background, which I got an engineering degree for my bachelor degree, and I went to US for my master degree, also focused on engineering area. Then I pursued the financial course and other financial knowledge afterwards. So after graduate, I moved into the fund management industry at the very beginning. So that's 2010, which is 15 years ago. So since then, and I focus majority on industrial sectors, like which include renewables, like electronics, like automobile, like machinery, and things like that. So for the past 15 years, majority of my time are spending on such sectors. So it's a really great honor for me to be here. Actually, my mom paid a visit to Bangkok Bank around 40 years ago, and he visited the CEO of Bangkok Bank at that time, so trying to seek investment from Bangkok Bank to invest in China. So I think the friendship with Thailand started from at that time. So right now, my investment scope is majority focused on the sector I mentioned above. And my investment philosophy is I'm seeking the highly competitive Chinese companies in the growth sectors, which means we can benefit from their growth, benefit from their earning appreciation, so then create value for investors. So my investment research focused a lot to how to break down the competitive edge of one companies and how to find these companies in the growth sectors and also the company with good corporate governance. So the companies I invest for the past 10 years are mostly in renewables, in automobiles, like in AI hardware recently, and also in utilities, which brings clean electricity to us. So my fund invests no less than 80% of the non-cash asset in environmental fin assets, which include the sector above. So that's basically all the scope of my investment.
Great. So let's now talk about all these investment opportunities.
Sure.
So as we know, China has been embarking on this economic transition journey, and one of the key growth driver is high-end manufacturing. So which is the right place that Mr. Qi He is focusing on. And we know high-end manufacturing is a highly competitive industry, and also Chinese manufacturing companies already started to establish their global footprints in many countries, and actually in Thailand as well. So within all these themes, there are many sectors you mentioned: renewable energy, energy storage, EV, smart grid, utilities, etc. So can you give some examples, and what are the compelling investment opportunities?
Yeah. So there are many sectors that's really encouraging and compelling. So I would mention them like one by one. So one of the sectors I want to focus the most is the renewables. So we know that we are undergoing a very big energy transition, and solar and wind and EVs are like becoming more and more a part of our life. And we know that the solar electricity still generate less than 10% of the total electricity in the world right now. So there is a huge room for them to grow. And other than solar, wind is also booming. And with solar and wind, we need storage, because solar and wind, they are fluctuate. Their generation is fluctuate. So you need to couple with storage in order to provide stable supply of electricity. And also, since we already have the clean energy generation from solar and wind, so we can see that EV is also become more and more popular, no matter in China or in Thailand. So EV it's account around less than 20% of the total car sales in the world today, but it's growing very fast. In China, it's growing around 30% every year. So for the world, Europe, they are growing around 20 to 30%. And in other parts of the world, it's also going very fast. So renewable, it's one of the major sectors we are focusing on. Although there are some oversupply issues in the past 2 years, which we will talk later, but I think we are already at a quite inflection point of the renewable investment right now. Also, I want to talk about the AI supply chain, because we know that AI is a very hot topic since 2023, but a lot of people focus AI investment in the US stock market, but which I would say China also has a lot very good AI hardware companies. If you look at the NVIDIA's most recent launch product, NVL72 GB200, the rack costs around 3 to 5 million US dollar each, which NVIDIA earns around 70% gross margin. But other than this 70% gross margin, the remaining 30% it's breakdown into several parts. One is the chips from TSMC, which manufacturing in Taiwan. But other than the chips manufacturing by TSMC, most of other things are manufacturing by the Chinese companies. No matter the liquid cooling, like the printed keyboards, and also the optical fiber, optical transceiver, and many other things other than the GPUs are manufacturing by China or by the Chinese companies. So Chinese company did provide a very good opportunities for AI investment. If you look at the best performing stock in Chinese market this year, most of them are AI hardware companies. No matter where they are, no matter they are making optical transceiver, optical components, or they are making electronic components, they all benefit from this AI boom. So if you look at their revenue, their profit, they keep growing for the last 5 to 6 quarters, and it hasn't stopped yet. So it's keep going. So I think the AI is changing our world, and also provide a lot of benefits to the Chinese AI hardware companies, and also provide a lot investment opportunities for us. And so that's for AI. And also, I think utility is also a very interesting part. Maybe Fujia can talk a lot more about it, because we are maybe entering interest rate is like going down for the next couple of years, right?
So indeed, utilities, because it's very sensitive to the rate yield, and as we know, the Fed is coming to the rate cut cycle, and that is why we think utilities, as on one hand is very defensive play, but on the other hand is very subjective to the rate cut, will have actually the up rally potentials. So that's also one of the areas that Mr. Qi He is investing in.
Yes.
Yeah, so that's a lot of opportunities we have talked about. So just to wrap it up, renewables, that includes solar, wind, EV opportunities, and also Mr. Qi He highlighted the AI infrastructure opportunities, especially on the hardware. Just to supplement on the anecdote, Mr. Qi He is going to visit AI hardware company, which has plant in Thailand tomorrow. So this is also part of the field trip for him.
Yeah. It is, yes.
Yes, so a lot of Chinese companies are going global, as we mentioned, building plants, in the global markets. So those are the opportunities that you will be benefiting from in the Environmental Protection Fund. But my next question is regarding policy. I think during my many trips to Thailand, many investors here ask a lot about China policy, because we all know that China market is very subject to the policy shift. Luckily, from September 2024, we have seen a complete policy pivot. So could you tell us more about what's your view of this, high-level macro perspective policy shift?
Yeah, we all know that after 2021, there are some tough moments, like for the Chinese economy, like no matter the COVID lockdown or the tariff or the trade war, so it all create difficulties for the economy itself or for the companies who operating in China. But since 2024, I think a lot of things have changed. I think one of the big change is the total support from the central government, no matter in the real estate sector or in the local government sector. For the real estate park, I think a lot top cities have been lowered their mortgage rates a lot, and also have been lower the barrier of buying or purchasing house. And for the local government sector, the central government have taken up a lot of local government steps. We know that some local government in China has accumulate too much debt, which create instability to the financial system. But the central government give a promise last year that he will taking up most of the local government's debt, which makes the local government a lot easier to operate in the future, and give a lot of confidence to investor, which invest in the no matter banks or insurance companies, because these companies have a lot related relationship with the local government. Then this government support give a lot of confidence to them. And that's the support from the central government, which give the financial system stability. And also for the demand side, there are a lot of policies coming out last year. One is the big trade-in program, which gives subsidies to consumer who buys EVs, home appliance, electronic products, things like that. So we can see that the car sales or the EV sales since fourth quarter last year to right now has seen a very significant rise, and also the home appliance sectors enjoy a big subsidy which boosts their sales. And also we see that subsidies for the childbearing, which the government give each child under 3 age under free have like 300 yuan each month. So yeah, that's very significant to a lot of families to have more than one child, which is a big support to them. And that's the support for the demand side. But another thing I want to mention is the supply side reform, which we call anti-involution policy right now.
Maybe let me chip in here for people who do not understand the word
Okay.
involution. It's becoming very popular in China. Basically, involution is describing a state of excessive competition, which usually leads to price war as well as diminishing returns. So that is why, anti-involution policy right now is really pretty much on time to resolve these issues. So please continue, Mr. Qi He.
Yeah, I really think the anti-involution is a big game changer for the stock market. Why I say so? Because we have undergone this several years ago. We know that since 2016 to 2020, China's stock market performing really well at that time. And then if we date back to 2016, there is a movement which is similar to the anti-involution policy today, which we call the supply side reform, which pretty much have the same philosophy as the anti-involution. So since the supply side reform in 2016, so which target mostly in the commodity sectors, like the oversupply issues in aluminum, in coal, in steel, in glass, so mostly target in these commodities. So since then, this industry gradually become very profitable because no more capacity is coming online, or very limited capacity have been coming online since 2016. If you look at the aluminum sector or look at the coal sector right now, they are really profitable and they are enjoying a very high cash generating capability, and then they pay out dividends a lot every year, and their stock price keep rising for the last 3 years. So it's if you look at their operating their status, they are really well. So for the anti-involution policy right now, it's have the same philosophy, but a little bit different from what people have did in the 2016. Because in 2016, the government mostly focused on the commodity sector to tackle the oversupply issues of commodity sector at that time. But for the anti-involution in 2025, the government are more focused on the manufacturing or the industrial side. It's more focusing on the oversupply issue in the so-called industrial sectors. Solar, wind, and renewables are the most mentioned ones. So I think it's very rational to tackle the industrial or the high-end manufacturing parts right now, because China already supplied the largest part of the solar panels, the wind turbines, and the EVs to the world. So but in order not to be losing money or making a lot burden to the financial system for these companies, so they need to be profitable. So the government is like setting up several regulations to tackle this like money losing status right now. I think one of the most important regulation we are right now have is the price law. So the price law in China was established in 1997, but it has been modified a lot this year. One of the philosophy or one of the purpose of the price law is that ban the corporate from selling products lower than their cost. So that's the philosophy behind the price law. But it's easier said than done, right? Because the cost of different companies are are very different. But the philosophy of the price law is to ban this like loss-making selling. And I think the execution of the price law is through different levels, either from the central government level or from the self-regulation of the corporates. So solar is the first industry that was applied to this price law. So it's undergo a lot of like self-regulation, and also the government like also have been like give a lot of like maybe hold a lot of conference and then bring the corporate CEOs together and to see how to tackle these oversupply issues in China. So to be concluded, the government right now is already focused on the oversupply issues in the industries right now. This anti-involution policy is not just in 2025. It will be a long march journey for the next 5 years. And this is a big game changer for the stock market, because a lot of companies in the Asian market are manufacturing company. If we can solve these oversupply issues, the profitability of the company will coming back, and also the confidence from investor will come back, I think.
Thank you. Let me also supplement something here, because some investors, they question about the legitimacy of this so-called anti-involution policy. Actually, if you carefully read all the documents since last year, it was already mentioned many times in our economic working meeting, etc., etc. But this year, the voice indeed gets louder. And this is because in July, on July 1st, in the Central Commission for Financial and Economic Affairs meeting, President Xi, he called for regulating disorderly price cutting and excessive competition among the peers. So this is the reason why we think, this policy, as Mr. Qi He mentioned, will be a guideline in the next 3 to 5 years to come, ranging across industries like we have illustrated here, such as solar, wind, NEV, coal, steel, cement, etc., etc. And again, I want to, echo our product here. Many of the beneficiaries will be in the Environmental Protection Fund that Mr. Qi He is investing in. So I think, we want to emphasize the importance of this anti-involution policy. And as a result, you should be able to see the improving pricing power as well as industry consolidation, and, leading to the, company results will be the improved profitability of the corporates. So that's some of the policies that we have already highlighted. But next one is actually regards our external risk. I know at the beginning of the year, everyone is worried about tariff. And that was the most, I think, risk that PMs have to take into account. However, now it seems it's better than feared. And for the very latest, we know that the China tariff has again been deferred to November. So, Mr. Qi He, what's your view on the tariff going forward, and how does that impact your portfolio?
Yeah, I think China faced tariff not just in 2025, because since the first term of Trump administration in 2018, China faced tariff since then. It has been like almost 8 years. So during these 8 years, no matter the government or the Chinese company itself has made a lot of preparation, and they have diversified in 2 ways. So for the business perspective, they diversify their business, no matter not just focused on US, but also focused on other parts of the world. So if you look at a lot of companies' business region breakdown, you can see that a typical company will be like 1/3 of their revenue coming from US, 1/3 coming from other parts of the world, and 1/3 coming from China. So a lot of company has adopted like diversified strategies in order to mitigate the US risk. And that's one point. And because we see that actually the demand from other areas are quite strong. The US demand, it's actually not that good since 2024, but we see that the demand coming from the Middle East, coming from the Latin American, coming from the Africa are very strong. And Europe is recovering in 2025. So actually a lot of companies had benefit from this high growth and also the recurring from like these regions. So that's for the business areas perspective. And also from the manufacturing perspective, a lot of company has diversified their manufacturing plants. No matter building a plant in Southeast Asia or in the South American, the Chinese company have already been go globally. They're not just building manufacturing sites abroad, but they also doing business locally, which called local for local. So we see that no matter the EV companies like VID and also other companies like a lot other big companies like CATL, and they build the local plants and they also serve the local markets, and which it's not just trying to mitigate or reroute it, the US trade, but also try to serve the local market. So it has been 8 years since 2018. So the impact from the tariff have been already been prepared a lot, and then also been like mitigated by such diversification. And that's the first part I want to mention. And I think the second part is actually I think US and China needs both, right? Because a lot US politicians try to decouple from China, but the trial have been failed many times, like since the start from like 2021. And I think the US-China needs both, and US knows it cannot leave China in some perspective. Like let's talk about the iPhone supply chain as an example. iPhone supply chain got exempted from the tariff in 2018, and it got exempted again this year from the Trump administration, and because the US government know that it cannot assemble, it's not impossible and not realistic to assemble iPhone like in the US. No matter from the R&D side or from the engineering side or from the labor side, the US it's not has enough capability to assemble such big amount of iPhones by itself. So that's why iPhone supply chain got exempted twice, no matter in 2018 and also in 2025. But US can supply high advanced chips to China, and China can assemble the iPhone for the US and shipping back to the US, which benefit the both. So I think that's why I think US-China needs each other, and it's hard to decouple. So what we're seeing right now is the tariff risks. It's quite controllable. It has been several talks going on, no matter in Geneva or in London, and maybe next week in New York or Washington, there will be another talk going on. So I think both sides have been communicating a lot and then reach kind of the agreements. And so I think the tariff it's existing, but it's controllable and it's manageable.
Great, thank you. So basically, there's very limited downside risk regarding, tariff. And let's talk about upside then. Year to date, I think, if you have followed China market, it has been a great, strong rally. But I know many investors maybe sitting over here were still living in the memory of 2021 to 2024, where China market has experienced a significant downturn. But this year, if I just put into numbers, CSI 300 has already surged by 14%, and active fund in China outperformed the index. So the average mutual fund already achieved 27% year to date. And we can see this rally is still ongoing. So, with all that rally being said, Mr. Qi He, I want to ask you, do you think this is a sustainable bull market for our investors to participate?
Yeah, I think it's quite sustainable because if you look at what happened for the last 5 years, there are a lot of things going on. No matter the COVID we have, the lockdown which we have in 2021 and 2022, and also we have seen the collapse of the real estate market since 2021, and we see the Ukraine-Russia conflict, which caused the supply chain disruption since then. And then, but after all going through this disruption and events, but we see that the Chinese company are still performing relatively good, which you can see from this what the graph show here. The profit of the blue chip companies are still growing since what we call the peak of the economy in the late 2020 or the early 2021. So, but if you look at a lot of companies, no matter in the US or in the Europe, they still not recovering from what we call the disruption for the last 5 years, no matter the supply chain disruption or the COVID disruption or the inflation afterwards. A lot of foreign companies had still been affected and not recovering from that. So after going through such difficulties, we are still achieving this growth and then achieving the cumulative return of profit since 2020s. We may see that the resilience of Chinese economy and the Chinese companies are still very good. Yeah, and also I would like to mention one is that the proportion, because a lot of people are still concerning the real estate, the impact from the decline of real estate in China. What I'm trying to say is that the real estate it's still an issue and not recurring, but its contribution to the GDP or the total economy itself have been shrinking a lot. So you know that China are driven by 3 pillars. The economy are driven by 3 pillars. 1/3 coming from consumer, 1/3 from exportation, and 1/3 from investment. The real estate, it's the contribution of real estate in the investment is around 15%, 5 years ago or 6 years ago. But right now, for the investment part, the real estate contribution is already around less than 30% or around 20%-ish. So I think the impact from the real estate has been, the worst time have been passed because its contribution or its portion to the total economy had already been less than 15% or around 10% right now. So, and we see some stabilize in certain cities, although the overall market are not recovering yet, but we see some stabilize in some cities. And I think the government is keep pushing out supports to the real estate market, like they build a reserve fund, which trying to accumulate house from the market, which help to stabilize, and then they give incentive for new home buyers. So I think it's just a matter of time. So I think the real estate market will stabilize finally. But the real estate market is not a very big issue right now. No matter it stabilizes a lot, I think a lot of Chinese companies can still perform very well.
So Mr. Qi He mentioned about the fundamentals. Basically, the key message is the worst is in the past, and we believe that the economic fundamentals have bottomed out. Let me also supplement on the liquidity and sentiment perspective. So for people who follow Chinese market very closely, yesterday the trading turnover for A-share market has hit 3 trillion RMB. That's only the second to the peak back in October 8th in 2024, where we had 3.5 trillion. So usually the turnover is very much positively correlated with the market performance and obviously a key indicator for the sentiment onshore. We see that's why the sentiment in China is very much elevated, and we think this is continuing because if you also keep tracking the deposits of household, you have seen the diminishing or the reducing pattern of household saving. So people pull out of their savings from the bank and they start to allocate in their non-bank financial institution accounts. And that's why you see the different pattern and people start to participate in the China A-share market. So we think this year, thanks to all the sufficient liquidity, also the policy put, as well as elevated sentiment and no more downside risk, this is really the good place or good time to invest in A-share. So Mr. Qi He, last question. Do you think this is the right time?
Actually, I'm putting my own money in my fund no matter whether it's good time or right time every year. But I do think this is the right time right now, which I will summarize in the several points. One is that the worst has been behind us, I think, because as I mentioned, the real estate has been already at the bottom. It's not recurring yet, but it's cannot be worse, and the contribution to the economy has been relatively small in the comparing with what we had 5 years ago. And also, since the September 2024, we see the pro-growth policies coming out, and no matter in the consumer sector, but also in the financial, like the local government debt level, there are a lot of support coming out from the central government. And also for the supply side, we see this anti-involution movement, and which I think is a big game changer. Because if that's success, or no matter whether it's success or not, it will help the oversupply issues. Because we know that Chinese company making a lot of very fantastic products, but one of the big issue is that some of them are not making money by manufacturing such products. So the anti-involution is trying to tackle this. So bring the corporate's profitability back, and also bring the investors' confidence back. So from all these points I mentioned, I think it's really a good time to invest in our fund right now.
Thank you. And hopefully this is an informative session for all of you. And we are in the hope of, people participating in China A-share market and enjoy the great return. Let me just use the last 2 minutes to also introduce another fund which this FOF is going to invest in. Because as we know, 70% will be investing in the Environmental Protection Fund led by Mr. Qi He, and 15% invested in Kexiang Fund. So a quick introduction of Kexiang Fund, the lead PM, Chen Hao, who is also a senior managing director, a veteran PM at eFund, and he has in total 18 years of investment experiences with deep knowledge and practitioners across the market cycles. So his investment strategy is actually an all-sector, small to mid-cap tilt, growth style kind of investment fund. And his research and investment scope is very broad and balanced, allocated in different sectors, such as the growth sectors like consumer, pharmaceutical, advanced manufacturing, and also cyclical sectors, such as new energy, TMT, as well as materials. So we think that Kexiang is a good supplement to Mr. Qi He's environmental protection section because on one hand, you get the thematic play capturing all the next gen investment opportunities. But in the meantime, Kexiang is really a broad-based fund that also help you capture all the investment opportunities and benefiting from the current growth style market. So that wrap up our session. Thank you very much for listening, and we hope to speak to you later as well. Thank you.
Thank you.